after its takeover of Diamond Bank earlier this year. Lagos-based lender Access is now Nigeria's biggest bank by assets. The acquisition earlier this year saw Access Bank's assets rise more than 30% to $18 billion. Let's discuss the future of the sector with Herbert Wigwe. He's the CEO of Nigeria's Access Bank and joins us for an exclusive interview on the London set. Herbert, delighted to have you with us. Thank you so much.
Thank you, Nero.
Congratulations on the acquisition. So as we've just said, biggest bank by assets, but some of your rivals do still surpass you in terms of being more profitable. So how do you plan to catch up on that front?
Very simply, I mean, we're going to push our retail business. When we basically came into this new 5-year corporate strategic plan, the whole idea was to now focus on retail and bring down our cost of funds. Now, this merger with Diamond Bank is basically going to achieve that. We now have 29 million customers. We're going to reap the synergies, bring down our cost of funds, which is already happening. Okay, and then of course, you know, just the shared transaction activities that come from retail would basically get the synergies up to the point where we'll basically get to where our comparators are. But we're extremely confident that we will get there within a couple of years, 2 years.
Okay, 2 years. Are you planning any more acquisitions or any more deals of any kind, Eurobond loans, local debt, etc.?
No. We basically have to lock down this particular transaction, make sure we get the efficiencies right, so we don't have any mergers or acquisitions right now as far as we're concerned at the parent level. But in terms of our capital plan, we basically have a very, very disciplined capital plan which we stick to, which is within public domain. So we've basically called back the Euro bonds which we had issued, which were basically 2021s, paid them back, same thing with that of Diamond. So we think we are okay where we are for now. We've also lifted our capital adequacy to where we want it to be. So I think the institution is now set for the growth that we want.
Okay. Your non-performing loans, though, rose to 10%, I believe, following the acquisition of Diamond Bank. How worried are you by that? And what are you planning to cut them down in order to get them below that lower than 5% regulatory threshold?
Now, we've done this before. I mean, when we did the acquisition of Intercontinental, it rose to as high as 21%. Now, one of the greatest strengths that we have is that we have a very, very robust risk management culture. All right, and when we did Intercontinental, we were able to get it down to sub 5% over 3 years. Now, it is 10%, but one of the things we've seen that we're extremely happy about is the fact that we're now seeing those loans turn around. We're beginning to get significant recoveries just because the market understands that we have a very, very robust risk management culture. So we're right on track as far as the synergies are concerned from a recovery standpoint. In our prospectus, we're basically shared with the market basically how much recoveries we're going to get over the first year. I think in 6 months, well, actually, yes, 3 months already, we have achieved those numbers. So I think we're right on track. I think at the end of this year, it will be sub 10, well below 10. I think by this time next year, we will see it where we have traditionally been. And the year after, about 2.5%, which is typically where we are right now, or well, before the acquisition.
Okay, so it sounds like in the next 3 years, you'll get below that regulatory.
We will come to where we are now. We've always had the best ratios as far as our non-performing loans are concerned. We will get to that number in 3 years. However, getting below 10 is going to happen this year. Getting to 5 will happen next year.
Okay, thanks for that clarification. Let's also talk about some of the measures by the central bank that aim to, well, essentially force banks to lend. Now, to sort of look on the positive side, you're actually one of the few big lenders to already be above 60% in terms of that loan-to-book ratio. But just tell me your view on the measures the central bank has taken. Was it a good or a bad move?
I think it's a great thing. I think we need to stimulate lending within the real sector in Nigeria. I think banks must be encouraged to lend to the real sector, to lend to small and medium-scale enterprises, which represent the bane of our entire economy. Okay, and once that happens, hopefully, we should start to begin to see GDP grow. So I think it's a great thing. And if you had allowed us as banks to basically operate in the manner in which we've done in the past, the natural thing would be to crowd out to government, to guilds and all of that. But I think this whole effort, which is coming from the central bank, is to encourage basically for banks to support the real sector and let it begin to show as far as GDP growth is concerned.
Yeah, no, I understand the rationale behind it, this sort of policy change telling banks to increase their loan-to-deposit ratios to at least 60%. But will it actually work, given that it's happening against the backdrop of a fairly weak economy in terms of growth, but also inflation being in double digits and government bonds yielding almost 15%? So will it work?
I think it will happen. I think it will happen. First of all, banks will comply.
Okay.
Secondly, I think one of the things or competitive advantages people are now beginning to see is people supporting small and medium scale enterprises, even though the scale is a little bit small and complying within the time frame may be a bit tricky, okay? But people would have to comply. And basically what that would do is to help, as far as financial discipline is concerned, helps small and medium scale enterprises begin to grow and all of that. If we don't have that kind of thing, a sanction coming from the central bank, what you will find is that most banks will not do it. But we're beginning to use technology to create the various algorithms required to support SMEs. And it's happening more and more. I think this initiative from the central bank can only make banks focus on it even more and faster and help to stimulate growth.